Hey everyone, thank you for attending the Place Your Trades Network Spaces to discuss shipping, tankers, drill ships, and defense. This Spaces is brought to you by TradeAbate, which has a custom web app dedicated to trading CME Group's new daily option contracts, including indices, energy, metals, and now Bitcoin. You can use the link in my Twitter stream to get the TraderVet app for free. I also write a weekly blog on markets that you can find at placeyourtrades.com, and that is absolutely free to sign up. And now we'll get to it. Our guest this week, we have John Konrad. Captain John Konrad is founder and CEO of GCaptain and is a seasoned maritime and offshore professional with hands-on experience in the energy sector. As a licensed captain for the world's largest ships, John has navigated drill ships and oil tankers, working closely with energy operations in various ports worldwide. His expertise extends to building cutting-edge ships and overseeing billion-dollar offshore construction projects in the most challenging marine environments. John is the author of Fire on the Horizon, the untold story of the Gulf oil disaster, and a distinguished alumnus of New York Maritime College. So welcome, John. Next, we have I can't even pronounce your last name, Froedge. Sorry.
Don't cry.
He is the CEO and founder of Marhelm. Marhelm is a shipping and commodities data service that covers more than 50 maritime shipping equities. With its data platform, trading Discord, and weekly reports, Marhelm's database covers more than 50,000 ships and thousands of trade routes with particular strength in oil and refined product tankers. So thank you very much. Welcome, you guys. And I will, I'll start with John. And how we do this kind of is it around, I'll ask a couple of questions and then go to the next person and ask a couple of questions. And if you have anything to add, you guys, on either person's response, feel free to do so. We can make this as conversational as possible. So we'll start with John. You recently wrote an article about the Biden administration's inconsistencies with the SPR. Can you kind of walk us through this and how this impacts the tanker market, the military, and energy security for the U.S.?
Well, thank you so much for having me, and that's a really big topic. You know, I'm not normally a naval and military person, but I've found that I've been diving deeper and deeper into this over the last few years, starting with the USS Fitzgerald hitting an oil tanker, and that was the Navy ship that almost sunk. A few people died, and it really woke my eyes up to the disconnect between the Department of Defense and the energy sector and the commercial sector. And as I keep going deeper and deeper into this with other people like Dr. Sal Mercogliano, it really highlights the critical need. You know, there's been such a separation in our country and around the world between naval defense and shipping and kind of Department of State policy and energy. And there have been these other factors like ESG and so forth that have kind of pulled our eye away from infrastructure and ports. And this energy one is now, I believe, the most critical concern in national security. You have to realize this amazing decades of deflation that we have seen has been because we have become a lot more efficient in the building and managing of ships, as well as containerization. The new LNGs are amazing. You have things like the Shell Prelude, which was, I believe, around $14 billion, which the sticker price is the same as a U.S. Navy aircraft carrier, but it was built in Korea, which is a lot cheaper to build than in the U.S. So, you know, the Navy still thinks it has the most technologically advanced, biggest ships or these super carriers, but the Prelude is so much more advanced. And you have other mega ships and offshore things that have really advanced over the last 10, 20 years and brought us cheaper oil, brought efficiencies around the world. But these efficiencies are really on the back of global security. You know, piracy has gone down. We haven't seen restrictions in world trade in the sea lanes. And this error really came to the end with the invasion of Ukraine, and seeing that the Navy was not prepared. We still have not entered the Black Sea. We just had a drone shot down over the Black Sea, and the Navy has no salvage equipment to go get it. We have no destroyers there to go get it. The military's pulling out of the Persian Gulf, and we see an increase in attacks, drone attacks by Iran and state players. And now China's really now has a larger navy than us and than the U.S. and is really concerned about the South China Sea. And what this is really doing is causing, on top of the sanctions that go along with the Black Sea sanctions, instead of those ships going from the Black Sea to Europe, the tankers, they are going all the way around the world to China and India. This is increasing ton miles. It's increasing the amount of crew that's on the water. And the Navy's not prepared. With the SPR specifically, it's a strategic petroleum reserve. And this is absolutely critical because with these attacks, part of that investment in the infrastructure has really been on pipelines and, offshore drilling and construction. And we've seen with the Nord Stream attack that pipelines, because they're fixed, are very vulnerable, not only physically vulnerable, but with the Colonial Pipeline attack, they're cyber vulnerable. And with pipelines vulnerable, refineries vulnerable, you have to move, you need a storage, and you have to move that oil. And our storage of the crude oil is in the Strategic Petroleum Reserve. Biden has brought down those levels, and then it's got to go through the refineries, and then from the refineries, the managed product, the diesel, the jet fuel, and everything else has to be stored somewhere. The majority of our strategic storage was in a Red Hill facility, these huge, enormous underground bunker tanks in Hawaii. Well, the Navy did not do the maintenance, let them leak, and the Department of Defense announced the closure. And we have no real way of replacing these reserves. The Biden administration is just not interested in the crude. So we have a huge storage deficit in before and after the refineries, and we don't have a really good. There's no strategy to do it. The vice president of Maersk Americas just came out and wrote an article for GCaptain and SimSec saying, yeah, at current levels with the SPR full and Red Hill full, we need a minimum of 100 tankers if there's tensions in China. And right now, we have 10 that are absolutely reliable right now and can be used. So a huge deficit. And this is not just a Navy problem. The Air Force uses 60% of all fuel. The DoD is the biggest consumer of energy in the world. And the Air Force uses 60%. And we don't have tankers. They say they can go out to the market, but just a small ripple that we have seen in the Black Sea has caused a absolute soaked up all of the available ton miles, and nations are competing for these very few tankers that are left, and this is minor. If we had increased tensions in the South China Sea with China, with Taiwan, this would be magnitudes of order larger problem.
That kind of leads me to my next question is, you've talked about how American shipbuilding really has stagnated in an era where we see these huge LNG export projects going on and rising risk of conflict globally. So what are we missing here? What should I say? What is the U.S. missing here, both military and commercially?
Shipbuilding's the critical aspect, and there's a huge mariner shortage, and people don't realize, there are all these misconceptions in the world, and because we've kind of turned our way around from sea blindness. My biggest tip, and I want to give this tip out to energy traders. I know you have a big energy trader, But something that was vividly apparent to me when I was navigating tankers was the huge volume of product that goes to our airports, transporting to airports specifically. Out of all of the industries in the U.S., aviation is one of the very few that we've retained in the U.S., meaning there are huge economic incentives to both promote aviation and hide its energy use. I'm sure there's some thing about Greta Thunberg here, and there are mixed feelings, but she was right in the absolute amount of energy that aviation takes up. The Air Force alone is 60%, and we hide those figures. The biggest contributor to carbon possibly in the world as an individual is John Kerry, because he goes on these big jets around to so many climate conferences, and you've seen the airports in Davos. So, and the U.S. has really moved to that aviation specter. And when you see the amount of energy demand, I mean, look at COVID. We shut down airports, roads, trains, and we did not shut down shipping. Ships kept going, they kept refueling, and carbon levels collapsed, energy prices collapsed. And then we opened up ports, we opened up trucking, we opened up railroad, and it stayed low. It wasn't until we opened aviation that it really, really increased dramatically. And we hide these numbers because no one everyone, the elite loves their planes, and the average people likes planes as well. And there's a huge incentive by the U.S. to kind of hide these figures. So I think I got away from your original answer, but this is something, we need to, the amount of energy that goes into aviation travel is absolutely enormous. And this is a big component of our military and our world economy.
Absolutely. I see Josh Young on here. I'm sure he's pleased to hear that, since he watches that closely as far as China is concerned. We'll go on to, we'll move to Calvin, and then we'll come back to John. But Calvin, so you kind of have a unique way of approaching this shipping tanker market. Can you tell us a little bit about this and a little bit about your process?
Okay, so first, just want to follow up on John's, rich people and commoners alike love their planes comment. So if you look at the U.S. tax code, one of the most aggressive depreciation schedules is for private jets, right? So if you want to know the values of a nation, look at its tax code, and we aggressively depreciate private jets. So, if you have a lot of income that you want to offset to lower your tax bill, the IRS says buy a private jet. Anyway, on the tankers and shipping side, I'm not sure how unique my process is, but I basically just look at a lot of the same econometric variables that a lot of other shipping analysts look at: order book, trade flows, the rates that the ships are charging on the water. I think that I tend to look a little bit more on a cyclical basis. For example, a lot of people were really bullish on containers still in 2022. People didn't see the big rate collapse coming. And I said, look, you've got an economy that's slowing down. You've got all this COVID stimulus coming to an end. And we just had the busiest years at ports that we'd ever had processing cargo volumes. You've got a monstrous amount of ships that are about to deliver over the next few years. I can't see how rates stay high. And rates collapsed, right? Conversely, on my tanker stuff back in 2020, I really started getting heavy into tankers in 2019. I was actually in December 2019 mostly allocated to tankers. I pretty much only owned tankers at the time, and my whole reason for being long at the time was you've got pretty low order book, and you've got this big change coming up with IMO 2020. All the refinery economics are going to change. People are going to be sourcing crude from different parts. You've got all this EM growth, China, India, Africa, and you don't, have a whole lot of tankers on order. So that's kind of when I got into it, and it was doing really well. And I think I was up 90% in 2019. And then COVID happened, and a lot of the stuff that I had was, limit down for, days. Thankfully, I was short at the time. Airlines, cruise lines, casinos, especially anything in Macau. And so that, kind of offset a lot of the pain. But then after, I said, hey, these tankers, we've still got all the same problems we had before, right? The fleet's super old. We've still got a tiny order book. We've still got these structural changes in the oil market. We basically mandated for environmental regulations new fuel types. So we said that, okay, this normal bunker fuel, residual fuel that you guys have been burning, for basically generations, you're not going to be able to use that anymore. So that was the stuff that basically comes out at the end after refining a barrel of crude oil. You've got some, kind of, I'm not going to call it sludge, but you've got much heavier oil that's left over at the end of the refining process. And so the thing is that those heavier oils, we call them bunker fuel. We call it fuel oil. Those are much heavier in a lot of pollutants, stuff like sulfur. So we started putting sulfur caps in place, right? And we said, okay, we're going to limit you to, and we've done this in road fuels too, for example, in diesel, right? So a lot of these sulfur changes have been very aggressive. They've required a lot of capital investment in refineries. They've produced big changes in oil flows. For example, right before IMO 2020 hit, back in 2019, I remember that Pyrenees, which is a West Australia crude grade that is basically heavy sweet. So it's very dense, and it also has very low sulfur amounts. So you basically at the end you get a residual that has very low sulfur. You don't have to treat it a lot more to get the sulfur out. So there were all kinds of things like that were kind of showing that the oil market was going through dramatic changes. And after COVID, all that got masked, right? Because we shut everything down. There was not enough demand for essentially any oil product, right? We like John was saying, we shut down all the ports, we shut down the airports. Even shipping for a while was extremely disrupted. We had cities of 15 million people with nobody except a few cops and health officials on the road. It was crazy. So it kind of masked those structural changes that we got from changing environmental regulations. Those little changes, they create systemic differences, right? It changes all the trade flows, all the refinery economics. All of a sudden, the teapot refiners in China, couldn't compete in the same markets anymore because refining has historically been a very marginal business, right? So then look what's happened in the last 2 years. Okay, PBF Energy, for example, I was buying that at basically like October 2020 after COVID. Aviation demand hadn't really recovered yet. Road demand hadn't really recovered yet. We were still way off kind of pre-COVID levels. And people said, oh yeah, refineries are never going to be profitable again. Oil tankers are never going to be profitable again. And, I'm thinking, well, you still have these cyclical changes or these, systemic changes from before. You still have, on the refining side, a lot of people who didn't make the necessary CapEx investments. You have, the low order book on the tanker side. You've got more environmental regulations upcoming, which actually just came into effect this year. The carbon intensity initiative stuff, which we can talk more about because those are also having quite an effect on the market. But everybody just kind of assumed that the way things were in October 2020, post-COVID, that's the way things always are going to be. Buy Google and Amazon because we're never going to use, oil again. The things that we produce, all the petrochemicals, all plastics, those aren't full of oil. We're not ever going to travel again. Nobody's ever going to go on a vacation. Everybody's going to work from home forever, right? It's like whatever narrative takes over in the market, it's like 90% of people, that's what they believe through and through, and they extrapolate that to infinity. And so, my thing was just, you've got all these environmental changes, all these regulation changes, you've still got the low order book, and, something else can happen, right? So scrapping picked up. Things had already started improving. Q4 21, Q3 21, we started really, seeing some improvements. And then in February 22, obviously, Russia invaded Ukraine. We started getting the big SPR releases. So, tankers that, already had a lot of kind of structural reasons for why they shouldn't trade at 20, 30% of their net asset value when their net asset values are at cyclical lows, right? That was crazy. Now oil tanker shipping is one of the most profitable businesses on the planet. I mean, you're talking about people that, bought ships for $80 million during COVID. And, those ships are now getting paid $12 million, $15 million for a 90-day voyage, right? I mean, it's kind of, and then that's the nature of shipping in general. Something happens, rates go crazy. And then the question is always, okay, well, are rates going to stay high, or are we going to get a crash? What's going to happen next cyclically? So, right now we're starting to see ordering pick up some, but it's still like the order book is multi-decade lows. It's single digits in just about every single class. It is, far as why are the rates so high now? You had all these strong kind of structural fundamentals at the beginning. You had the changing oil market. You had the environmental regulations coming up, the CII rules. So basically that means that ships need to limit their emissions to a certain level. And they can do that a couple of ways. They can either install what's called an engine power limiter, which basically just doesn't let the engine go above a certain RPM level. So essentially they slow down. They've got a rating system like A through F. And essentially anything that's F rated in a couple of years is not going to be able to trade at all. Anything that that's A rated, theoretically, charterers are going to get basically incentives, some sort of carbon system that they haven't completely worked out yet for hiring, the most efficient ships. Anyway, the net result of this is that all ships have essentially slowed down to improve their carbon ratings. So, you had all of these kinds of regulations that were changing the market, and then you throw in this Russia stuff, and, Europe was buying tons of Russian diesel pre-invasion. I think just diesel alone, Europe was buying 600, 700,000 barrels a day from Russia. So that doesn't seem like a whole lot, but it is, especially when you consider that one MR tanker can carry about 50,000 tons. That's kind of the main ship that was used for trading between Russia and Europe before. You can carry about 50,000 tons of fuel, and all of a sudden those ships are going to India, they're going to China, they're going to Saudi Arabia, they're going to places that are much farther than Europe. And you can do the math. I've actually done some math on my blog and for my subscribers, showing how the number of ships that you need to cover a trade route changes as you change distances. And theoretically, ships can speed up, and then that can cover some of the shortfall. But in this case, because of these CII regulations, ships can't speed up. So you basically need the same number of ships to cover much more distance. And that basically just can't happen. So then the next thing that happens is economic regulation, right? The person who pays now it becomes who's willing to pay the most for freight. So that's sort of what we've seen in the tanker market. Another complication is Russia has purchased so many tankers. They've purchased a lot of old tankers. So they're using those tankers to essentially sell their oil at the prices that they were selling at before. This is how it works. Russia can still sell oil to the EU if the oil is below the price cap, okay? So in order for the oil to be below the price cap, they basically charge a bunch for freight, okay? So the Russian government now owns these ships. The Russian government's getting the freight charge for this ship, which makes up a lot of the discount in the price of oil.
And taxes and the new tax scheme, right? They just raised the taxes as well.
Yeah. So anyway, this this essentially also takes ships out of the market, right? Because now you have basically a sovereign player who has a vested interest in using freight to get around other sanctions, and the EU just looks away. The Greek tanker owners, they're happy to oblige and sell older ships for this, or use their newer ships to help move Russian oil. I'm sure there's some funny things going on with some of those contracts and how the money's flowing around. If you look at AIS data in the Mediterranean, you'll see all kinds of crazy patterns with ships pulling up next to each other and going in circles and just doing things that they didn't do before we had this Russia stuff. So it's kind of a mix of all the environmental regulations together, the low order book, the Russia business, Russian products going farther. I mean, they're selling their diesel to Saudi Arabia, who's then reselling it to Europe. They're selling diesel and crude oil to India, who then directly resells it or re-refines it. So, it's basically, the same consumption. I think we're actually globally a little bit higher on consumption now than we were a year ago. Or a little bit more than a year ago before the invasion. But the difference is that in order to satisfy Europe's need to feel like it's morally superior, we have completely made the market for shipping go haywire. So I'm all for it. Okay, I mean it's really I was leveraged long tankers in Q4 of 2021. Okay. I mean, like I usually don't use leverage. I think it's bad to use leverage, but I was short puts, I was long calls, I was long common, and I was almost, just tankers and oil producers before the Russia invasion happened. It's, I think that it's stupid. I think it's bad for civilization. It's been good for my portfolio. Anyway, that's I think as long as I can talk uninterrupted without someone asking me questions or getting a drink of water.
well, thank you. So, I had another question. I mean, you kind of covered a lot of the questions that I was going to ask, but how are you saying everybody's talking about this deglobalization? Is this at all affecting the tanker markets? And that's kind of a two-part question. And because you touched on the kind of the new Russian fleets of tankers, how hard is this to track, and is it affecting other tanker fleets?
Can you repeat the first part?
The first question was on deglobalization and if at all this is affecting the tanker market.
Okay, yeah. So the regulation is definitely affecting the tanker market. I mean, it's affecting all of shipping. I mean, if you they're literally you can go and look up a diagram of an engine power limiter. Okay, like they literally put a mechanical stop screw sealed by wire in the engine side control console and the governor of the engine. okay? And it literally stops the engine from going above a certain RPM level, okay? So the ships like literally physically can't. If they've installed an engine power limiter to increase their CII rating, they literally can't go faster, okay? Like, I mean, they could remove that engine power limiter, I suppose. But if they've installed these devices, they can't go faster, right? So that's having an impact on all of shipping, and we're still in like the data gathering phase.
The ones Russia bought can go faster because they're spilling oil. They're not following any of these regulations. This upcoming Ghost Fleet, as Calvin says, how they're doing side by side transfers. There are oil spills popping up all around the world. We just had a major one in the Philippines, and there are others. Go ahead, Calvin.
Yeah, so at least for the Europe stuff, right? Because and it's mostly Europe that's driving all this environmental regulation. Is environmental regulation a good thing? I mean, I do think it improves people's quality of life. Okay, like I do think that it's good to not have smog in port zones. I do think it's good to not have smog in cities. I like to walk. I like to ride a bike. I think it makes my life better. Okay. But a lot of the politicians like to deny that there are any second order effects to these sorts of things. And I'm telling you that if sailing distances increase, the only way that you can compensate for those increased sailing distances without rates going ballistic and the highest bidder getting the ship is you either need more ships or the existing ships that you have need to go faster. There's a cap on how fast a tanker can go in the first place, how fast it's designed to go. John might know this one better than me, but I think it's very unusual to see an oil tanker sailing faster than 15 or 16 knots.
It's usually 10 to 12, 15, 15 knots, 16 miles an hour would be very fast for a tanker.
Right. And they can't do that because they're going to blow their engines, right? That's basically maximum engine power. So, I have a script I run to go and grab average fleet speed at, any given time for, ships that are ballast, ships that are ballasting or ships that are laden coming from AIS data. And right now it's around 12 knots, 11, 12 knots for laden ships. The older ships with the worst CII ratings, they're going slower. The modern ships with the more efficient engines, they're going a bit faster, right? So anyway, with these environmental regulations, you just are limiting the ability of the market to respond to these longer sailing distances. So the market has to reprice a ship. And then with Russia taking ships out of the market and all the crazy trading routes they're doing, all these crazy ship-to-ship transfers, basically inflating freight rates by charging part of the oil in with the freight, and then since they now own a lot of these ships, they get the benefit of that. It's I don't see tanker rates going back to the low levels that we saw in 2020 or 2018, 2017. I don't see tankers going back to there until we've had a lot of deliveries. It's going to take a lot of ordering. I think that we're probably at a minimum 2 to 3 years out from seeing tanker rates come down. Now, that doesn't mean the equities are going to keep going up forever, right? I mean, people are going to, price in changes, maybe a peace deal, maybe, the Russians and Ukrainians starting to work something out, and and Europe, saying, hey, yeah, everything that we're doing here is kind of crazy and stupid. Let's stop doing crazy and stupid stuff. Same thing with the United States, right? If people suddenly become reasonable,
we have to look at shipbuilding, and I think that's what Tracy had asked me earlier, and I got into aviation. But in the U.S., domestic shipbuilding is completely collapsed. It's collapsing in Korea and Japan, and it's really being taken over by China. And this extreme ballooning of the order book in containers and to a lesser extent LNG, mean that even if we wanted to build tankers right now, there's just not the shipyard capacity.
I mean, I'm seeing orders that are coming through for some ships, for some tankers, for some bulkers. Okay, but you've got a limited number of yards that can produce the really big ships, right? And a lot of those yards are in China. So some of those yards are in Japan and Korea, but as you said, they are losing ground to the Chinese. I mean, the reality is, you might know these stats better than me, so correct me if I'm wrong, but I think China builds 300 to 400 aircraft carrier size ships per year.
Right. And by the way, their aircraft carrier was funded by Evergreen, its major container ship. Actually, Evergreen, which is a Taiwanese company, paid for the digging out and the building of the dry dock, which then China turned around and used to build its first aircraft carrier. But the critical thing, and why I was tying, I think you asked me about shipbuilding, and I went into aviation. The U.S. Navy does not understand the finances. If you go back to the godfather of the U.S. Navy, it's Alfred Thayer Mahan. He was given the thing to build the U.S. Navy War College by Theodore Roosevelt. And he said the power of nations is in the combination of protecting of shipping and the commercial shipping itself. And the Navy's gotten away from that. I wrote an article of the Navy admirals do not understand Wall Street. So it's Taiwanese shipping company that built this dry dock. And right now, I just read a statistic that China has more ships under construction and now as terms of tonnage than we had during World War II at our peak. Some of these statistics are crazy, but they've also gotten this. There's this amazing book by Katharina Pastor, The Code of Capital, how we're leveraging and kind of bringing in all of these capital tools. A lot of the things that we learned from the banking collapse and the financial collapse of 2008, China has taken those and used it to kind of tranche out assets and derivatize them and do all these other things. And it's Wall Street that's feeding this money into Chinese economy and the Chinese shipyards. And by the way, some of these American tankers are being worked on in Chinese shipyards. But, and we've completely gotten away from the maritime aspect because the military has put all its focus on aviation and they don't understand the finances. And we have such a tie to aviation that we hide these aviation energy use statistics. We hide the subsidies that go into aviation. But you guys are financially literate. You can't track these. You can't track the amount of subsidies because like the Department of State is a sales agent for Boeing. They actually go in and they make sales for Boeing. So there are all these hidden subsidies, but our biggest aerospace company, Raytheon, has a market cap of $140 billion. 140B, our largest shipyard, which builds our aircraft carriers, Huntington Ingalls, ticker symbol HII, builds all of our aircraft carriers, builds our submarines, builds our destroyers. They build almost everything. This is our largest company, has a market cap of $8 billion. 1/14th of our aviation aerospace company, Raytheon, and what Boeing's like 80 billion. So
I'll give you an even crazier one, John.
We've sucked all the subsidies out of shipyards and all of our political clout and all of our attention. And China and Korea and Japan were happy to take this. We did support them. But now that China's focusing on attacking politically and economically Korea and Japan because they're within this chain of influence, they're using Wall Street dollars. They're taking Wall Street dollars in. They're derivatizing it. They're tranching it. They're using all these tools, code of capital, financial tools, in order to just pump it into shipyards. And now they control that supply book. And meanwhile, the biggest companies, shipping companies, Maersk, MSC, these huge container shipping companies, they have become too big to fail. So if Maersk fails, the country of Denmark fails. And if the country of Denmark fails, the European Union fails. So Maersk is building so at such a rate that they almost want a loss because they can put the competitors out of business. Same with MSC and CGM CMA, the French company. They can destroy this thing, but they're soaking up all of the capacity, and it's really tankers and energy that are suffering.
Yeah, well, I don't think you have to worry about those guys failing. I mean, they've been, delivering pretty solid returns for a century. Now, if the Norwegian pension fund gets its way and, replaces the board with with basically diversity points, then maybe they could fail. But they, for the past century, they've been pretty good stewards of capital. But let me give you an even crazier one. If we're comparing,
recently in the past couple of years, taken on McKinsey as consultants. This is why they are doubling down. Maersk is larger in China now than it was during the COVID lockdowns. They just signed a huge methanol deal with the port of Shanghai. And a lot of this is coming from McKinsey consultants. You have Pete Buttigieg, ahead of the DOT. He's a McKinsey consultant, and McKinsey has been really pushing the moving of manufacturing, apart from aviation, to China, and this deregulation of maritime shipping. So, turning the backs on the shipyards. We have an FAA, and if you go to the FAA building, it takes up most of DOT. And then the Maritime Administration, MARAD, is the maritime equivalent of the FAA. It's only one floor on the building. It's absolutely tiny. And the CEO of Maersk and the McKinsey people and the Evergreens and the big tanker companies, they never visit MARAD because they're down to less than 800 employees, where the Navy shipbuilding arm has 86,000 NAVSEA.
So, John, let me ask you a question, because you're obviously coming at this, more from like a nationalist angle, right? I think that I'm sensing like a strong sense of patriotism, and we need to do this for the sake of the country and for our defense and to keep our rivals from rising, etc. So let me ask you, what do you think needs to happen in order for the United States to have a shipbuilding capacity that is competitive on a world scale?
Well, if you ask the Navy, they say there is no shipbuilding capacity, and that's because they want to shrink the budget. And this isn't nationalism. This is global stewardship. Like I said, this deflation, the biggest technological improvement in the history of the world, is the shipping container. It's risen more people worldwide out of poverty. And the only way you could put more eggs in one basket is if those eggs are protected from pirates, from world leaders, from nationalist efforts, and you have that energy flow, which we've had the wars in Persian Gulf. So the Navy protects this world trade, which has risen. I mean, this is the reason why the world has improved. It's the tankers and the ships moving it. So it's not nationalism, but how do we get back to that? Well, first thing is we have to shut off Wall Street's flow of capital into these Chinese shipyards and companies like Evergreen. But the Navy does not understand financial engineering. The military itself has completely turned its back on Wall Street. So they have no idea what's happening in Wall Street. A lot of the Naval Academy graduates go into Wall Street. So they have an understanding of this, but the Navy itself thinks that it's tarnished. Wall Street's ugly and dirty. They think tankers are dirty too, but they will not even look at this. MARAD has an office on Wall Street, and I've never heard of a Navy captain there. Second of all, it's this MARAD funding. Every country, and you look at Levinson's, he did the box, the seminal book on the growth of containerization. He has a new book, Outside the Box. Every single shipbuilding nation has directly subsidized this. You have to put money into these shipyards. But you have 86,000 people in the U.S. Navy NAVSEA looking at these shipyards, and it's a monopoly. I'm mispronouncing it. It's not a monopoly. It's a monopoly, meaning that these shipyards, there's several of them, but they only have one customer. So the Navy dictates all these terms, and the bureaucracy is absolutely insane. When I was building ships at Samsung in Korea, if we wanted to make a very minor change, they said no. They would keep increasing the price. We wanted to move a scupper 10 feet for a environmental regulation, and they said that would be 5 million. We said okay. I was building a ship for BP. They said it would be okay. It would be 10 billion. And we said, okay, we'll pay it. They said it would be, million, 20 million. And we said we'd pay it. And they say, actually, if you want that, we're going to put you at the end of the line. We're going to sell your ship to someone else and put you at the end of the line, because everything is focused on that delivery schedule. Every single Navy ship, the aircraft carrier we just delivered was 5.5 years late and billions of dollars over budget. The $500 million Zumwalt destroyer ended up being $8 billion. And the Navy says there's no capacity for shipyards, but shipyards are very easy to build. You just bring in dry docks. When Korea ran out of capacity, they just built floating dry docks and these huge cranes. You don't need the land. You don't need everything. But the Department of Defense wants to push this energy initiative, and they want to support aviation, because when you retire as an admiral, you get a job in the board of Raytheon or Boeing or everything else. So they don't, if the shipyards had more capacity, more money would be funded into the shipyards. It would be taken out of aviation, and it would affect these people's jobs. So we have no leadership. There's no leader in this country or in the world. The international maritime organizations, the UN body of the UN, they're the one pushing all these crazy environmental regulations that you say.
So John, let me stop you for just a second.
We have no leader.
Okay, so I just think we all get that there are lots of problems. Okay, and I can understand that it's frustrating as a multinational company to get held over a barrel by a shipyard on the other side of the world, okay? But if we're talking in practical terms, acknowledging that there's, essentially zero leadership in the political class in the US because it's all driven by, greed and long-term individual career plans. And I'm not even saying that, that what you're saying, that we need this capacity, that we need shipyards, that we need a domestic maritime industry. I'm not even necessarily agreeing with that. I'm not disagreeing with it. I'm just kind of, picking it apart. So, just so you know where I'm coming from. In order for us to have shipyards, and in order for us to have people who work in shipyards, first let's look at who works in the maritime industry now. Filipinos, Indians, Ukrainians, Russians. That's like, am I wrong if I say that's 90% at least?
No, you're absolutely right. And this is a big push. We have no U.S. mariners left. China has over 3,500 ships. The U.S. has 86 in international trade. We have 86 ships in international trade under the U.S. flag. So you're absolutely right. And this isn't just about U.S. shipyards. I think you're right. We need the Navy turned its back on the merchant marine, but it also turned its back on Filipino merchant marine and the Ukrainian merchant marine. They're big on these alliances. We have shipyards in Europe, we have shipyards in Korea, and they're all losing market share to China. There's no leader who's saying, hey, we're all on the same team. The Filipino merchant mariners are, I think, 186,000. They're excellent seafarers. They speak English. And their jobs are getting pushed out by China, because China's saying, hey, when you come to port, they're making the passport and the port entry really difficult. So these guys are losing its job. Well, this is where American and European leaders can come together and say, how do we subsidize not just U.S. shipbuilding, because we need these Navy ships for protection, but Korea? How do we tie in the Philippines? How do we tie in the European shipyards that are closing, right?
Well, to me, I see the fact that the Chinese have such an extraordinary lead in industrial capacity. Like, I listen to guys like Peter Zeihan, or I don't know if I'm pronouncing his name right, but I listen to guys like that talk, and, it's all this like, China's going to starve, they can't feed themselves. And, meanwhile, they're one of the world's largest agricultural producers. They're right next to one of the other world's largest agricultural producers. and they've got more cranes and more people that know how to weld and more people that, know how to do electronics, right? Like, I mean, they've got literally more than our population, people that can do skilled trades, people that can do industrial work, people that can, work on putting together factories. I hear this argument that, the US we have a bunch of patents. We have a bunch of intellectual property. We have some of the best technology companies. Man, that counts for nothing.
Look at Japan absolutely collapsed in 1989 because of demographic collapse. And the world, a lot of the world is suffering under demographic collapse. I completely beat my head, and Joe Weisenthal of the Odd Lots is sick of me hearing it. But you have the Fed saying, well, we still have good joblessness, so we could tighten rates, job rates, so we could tighten rates. And I'm saying, it's because the largest generation of people in the history of the world, boomers, are retiring at an amazing level. They're leaving the workforce. They're leaving aviation, shipbuilding, everything else. And who's going to fill that void? But, one thing that America has is everyone wants to live here, and they want to live in places like Japan and Korea, so we can import. The world talent, can be imported if we fix immigration. But look at Japan, had a complete demographic collapse, and then what did they do? They moved the Toyota factory out of Toyota and put it in Alabama.
All right. We're getting off topic a little bit here, guys. And Robert's been here with his hand up with a question or a comment for a long time. So let's see what he has to say or has a question about.
Hey, thanks, Tracy. Great space, guys. Really, really informative. I have a question. This may be more skewed towards Calvin, but John, you can weigh in as well. The structural change in the global refining market, where we're sort of shutting down or at least not growing refining capacity in the typical hubs of consumption like the US and Western Europe, and moving that refining capacity to the only places it's being built, Middle East, Asia, et cetera. How does that impact the enthusiasm for sort of dirty tankers or product tankers versus clean tankers? And so how would you be seeing, how do you expect that to evolve, and how does it impact the sort of, clean or dirty tankers that you want to be investing in?
So I can give a simple answer. A simple answer would be that refineries in the Middle East are good for the product tanker market and bad for the crude tanker market. Refineries in China are probably good for both. So that would be the simple answer. I think as far as the people making the investments go, they're looking at the things that are being said in places like Western Europe and the United States. And you've essentially got a political class that, I mean, these people, they don't know how anything works, okay? Like the energy secretary didn't even know what the daily oil consumption of the United States was. I mean, so politically, you've got a very hostile regime to anything that's fossil fuel related. Who wants to invest in that? You've got Europe and California both saying that they're going to ban all new fossil fuel vehicle sales, ICE sales, by 2035, right? So why would anybody build a refinery in California where, people pay, what's the gas price there? $5, $6 a gallon right now? I'm not sure. I'm not, a regional gas pricing expert, but why would anybody want to build a refinery there when you've got Newsom saying that, the refineries are evil, that they're price gouging, that they're, going to control refinery margins. And then, oh, by the way, in 2035, you can't even sell your products. You can't, we won't even allow people to drive new gasoline vehicles anymore.
The Buttigieg is sitting on eight permits for new LNG terminals, which Europe desperately needs and is pushing it. They refuse to sign it, the Department of Transportation. So it's the extension isn't just in the U.S. They're pushing outwards.
Robert, did you have?
Meanwhile, Africa, the Dangote refinery in Nigeria just came online. That refinery is going to be a huge wealth generator for Africa. Like if, Nigeria has obviously for decades had lots of problems. It's had currency issues, right? Rampant inflation, lots of corruption. And then you have one guy, this African billionaire, Dangote, Aliko Dangote, I think is his name. And, this guy is basically inventing every industry, every supply chain on his own. Like that refinery, that man is going to create billions and billions in wealth for Africa. And, Africa, which has the fastest growing population in the world by far, despite the fact that it's a very tough place to do business for an American, right? There's a lot of corruption. There's a lot of theft. That place is going to grow like crazy. There's going to be a lot more billionaires made in Africa. There's going to be fewer and fewer billionaires and a lot of capital flight from the U.S. and Europe.
He's following the playbook of my former boss, Anil Ambani. I mean, Reliance in India did exactly that, and people are copying it.
Yeah, that's the way to do it, man. I mean, we should be focusing on, carbon sequestration. We should be focusing on improving the technology that we have and, making it less pollutive, okay? Making cities, improving our public transportation infrastructure so that there's less smog and less pollution. Like this whole thing of we're all going to drive, everything's going to be electrified, in a few years, and everybody's going to have the same standard of living in the US and Europe that, we've always had. It's going to get better even. Right? Everybody's going to have their own electric car. Everybody's going to have, a $100,000 vehicle, right? Like this narrative.
Let me ask you this, Calvin. Where are we getting the bulkers and all of the container ships and everything to move all this copper, right? And the oil that's required to go to the mines to extract it. Where are we getting?
Yeah, I don't think the bulkers are the problem. I think we've got plenty of iron. Okay, I think we can build plenty of ships. We've got plenty of steel. I think that the problem there, comes down to the copper. I mean, Tracy has posted lots of, things about depleting copper inventories. I mean, this fantasy that they have, I wish tomorrow in California that they would ban, just as a test case for the rest of the world to see, that they would ban all gasoline, all diesel, and they could go fully electric tomorrow just so that they can see all the transformers explode at once. I would like zero my portfolio just for the satisfaction of seeing that happen.
Did you have anything to add to that, Robert? I heard you try to speak earlier. Did you have another question or anything to add to that? I guess not. All right. Well, guys, we are coming up on the hour here. So really, I want final words from each of you. First of all, something that we didn't discuss yet, or, something that we really should be looking something we should really be looking forward to within this particular market. What should we be keeping our eye on? We'll start with Calvin.
Okay, so if Europe comes to its senses and decides that buying Russian diesel via an Indian or Saudi or Chinese intermediary is kind of ridiculous, and that they should just go back to buying from Russia directly because it's closer and they'll pay less, despite the fact that Russia invaded Ukraine, okay? So if people come back to their senses, get out of tankers. Right, because those trade lanes are going to resize back to what they were before. The one good thing is that we still haven't seen that big pickup in the order book. But if you see, that the trade lanes are going to go back to the way they were before the war, tanker earnings are going to go down. So that's from the tanker perspective. That's the big insight.
That's good insight. We will keep our eye on that. And then, John, your final thoughts and what we should be looking at going forward within this market, over the next, the rest of the year into, 2024.
Yeah, that Calvin's an excellent point. If things clear up and geopolitics clear up, tankers could collapse very quickly. They could also go the other way if China ramps up or tensions ramps up. So high volatility is the name of the game, I would say here. And you really have to focus on those geopolitical tensions. And so the two big things are, like I said, with supply, focus more on aviation, and with delivery, it's really about the ton miles. Look at how much more time that oil has to spend on the water. I like to add one very brief thing for the long term. And if you look at this electrification and the change in the global energy, and a lot of people think this is the future, we will have a very clear understanding when this is starting to happen, because the biggest source of wealth in the entire world is not gold deposits. It's not bond deposits. It's deposits of oil in places like Brunei. So if this starts taking traction, we will see people like the Sultan of Brunei and individuals who own huge deposits of oil and natural gas start selling them. And where they're going to convert them to Bitcoin or somewhere else, we don't know. But unless we see, those guys don't want to lose all their money. So if oil's going to zero, they're going to get out quickly. So I'm not really I'm taking everything with a grain of salt until I see these huge oil deposits start to be sold off by ultra wealth, the individuals.
Yeah, just one last thing I want to add. If anybody can find, there's a study that was done in Minnesota a few years ago by a think tank, and they said, what will happen if we fully electrify the state of Minnesota? What will the raw material requirements look like? That was done a couple years ago, and essentially the finding was that just doing that for the state of Minnesota would, for certain minerals, would consume, just for the state of Minnesota, the entire world's supply of those minerals. So I can't remember the name of that study off the top of my head, but highly recommend reading that for anyone who's interested.
Excellent, thank you. And I tend to agree. I mean, again, if we look at the copper industry, which I talk about a lot, we are in for a huge supply deficit, and you can translate that to lithium as well, and other metals needed to kind of electrify the world with. But with that said, that's a topic for another time. We'll do a spaces on that. But I want to thank both our guests, Calvin and John. Thank you so much for taking time out of your day to share your wisdom with us. I'm sure everybody garnered a lot of insights from your comments, so I really appreciate it. Follow these guys on Twitter. They're great. They put out a lot of information. Follow Place Your Trades so you can keep up with our other spaces going on. And with that, thank you guys so much. We'll see you next Wednesday, and have a good day, everyone.
Thank you very much for having me.